In today's video, we will review the best 2 stocks that could be bargain buys for 2023 and beyond. So before we start, like this video and subscribe to our channel for weekly updates. So let's get started. The media often presents a barrage of complications for investors to think about every day, but the truth is successful investing is very simple. All you need to do is regularly buy shares of growing companies. It doesn't matter how much you start with. The following companies not only have attractive long-term growth opportunities, but their stock prices are trading at bargain levels right now. Investors who put some extra cash like $1,000 into these 2 top stocks could double their money within the next 5 years. Taiwan Semiconductor Manufacturing is one of the largest chip foundries in the world. Some of the world's largest brands depend on TSMC to manufacture chips for their products, including Apple. TSMC generated a high profit margin of 45% last year on $76 billion in revenue. This reflects the company's unique capabilities as a chip manufacturer to provide a large capacity to handle lots of orders and its investments in cutting-edge technology. Because of these advantages, it can price its services to earn extraordinary profits, which ultimately drives returns for shareholders. Over the last 5 years, revenue and profits more than double. At the start of 2022, TSMC said the industry was experiencing a structural increase in underlying semiconductor demand underpinned by the industry megatrends of 5G-related and applications. However, the company recently hit a wall in growth due to slowing demand across the semiconductor industry relating to macroeconomic headwinds. Fourth quarter fell slightly over the previous quarter, but the stock has fallen to its cheapest valuation in years. With the stock trading at a conservative valuation of less than 16 times this year's earnings estimates, investors are getting an incredible value. A bet on TSMC is essentially a bet on continued development of smartphones, game consoles, data centers, and other markets using high-powered processors. It's a no-brainer. TSMC has a solid competitive moat. For example, in 2022, leading graphics specialist NVIDIA selected TSMC to manufacture processors for its latest graphics cards for gaming. Apple also tapped its services to supply chips for the latest iPhones, iPads, and Mac computers. TSMC is clearly maintaining a strong leadership position in the industry, and that sets the company up for accelerating growth when the industry recovers. Analysts currently expect TSMC to grow earnings at an annualized rate of 21% over the next 5 years. At that rate, the stock could continue trading at the same price-to-earnings ratio, but investors could potentially more than double their money from the increase in earnings. Salesforce is another leader in enabling the digital transformation of the global economy that is offering great value to investors right now. Despite delivering consistent double-digit annual revenue growth for many years, this Dow stock is currently 22% cheaper than it was a year ago, making it an absolute bargain for growth investors. Wall Street analysts are aware of Salesforce's strengths, but the reason the stock fell last year is decelerating top-line growth. Revenue grew 14% year-over-year in the last quarter, which was caused by unfavorable currency changes and customers keeping a tighter leash on spending. While double-digit top-line growth looks solid for most companies, it is weak by Salesforce's standards. Analysts are used to seeing this software powerhouse post 25% top-line growth every year, as it did over the last 3 years. If Salesforce can double its revenue to $60 billion in 5 years, which would be a lower rate of growth than it has achieved historically, it should generate at least $15 billion in adjusted operating profit. At the current share price, investors are paying about 11 times the company's projected operating profit, which is a bargain for a business that is still growing revenue by double-digit percentages every year. Buying $500 worth of shares each in TSMC and Salesforce could turn into $2,000 in 5 years from a combination of more earnings growth and the market assigning a higher price to earnings to these stocks. This concludes the list of stocks that could be bargain buys for 2023 and that could make you rich. As always, it is due diligence before committing your hard-earned cash to buying stocks or investing in the market. Which of the stocks would you consider adding to your investment portfolio? Let us know in the comments below. Don't forget to like our video and subscribe to our channel for weekly update on best stocks to buy in 2023. Thanks for watching and happy investing.